Hey everybody, it's Brian Bogner and Greg Towner with Parallel Portfolios. It's time for our November update. So let's go ahead and get right into it. Greg, stocks are moving higher. U.S. stocks here making some all-time highs. What's your take on this recent move?
Yeah, you mentioned it. All-time highs here in the U.S. This is an index looking at the entire U.S. stock market. We were in a range here for quite some time, and we just now in the last couple of weeks broken through that resistance, moved to all-time highs. Maybe in the short term we're a little extended, a little overbought, but we always believe in don't fear strength. If you go back over history, making new highs is a positive thing. And we switched to international. This is a broad international stock market here. It's not all-time highs, but it's 52-week highs, also breaking out. We've seen a lot of strong moves in international. So it's worldwide bull markets basically at this point. So we take that as a positive.
Okay, all right. So stocks breaking out to highs here. What are some things that maybe not be getting enough attention here by the media or analysts or things like that?
Yeah, these are some things that we look at a lot. We know others in the industry do, but we think a lot of investors don't. And like you said, a lot of media doesn't. This looks at all the central banks throughout the world. So in other words, our Federal Reserve here in the US and their equivalents worldwide, the percentage of them is now up to about 60% that are in an easing cycle. They're cutting rates. We have to go back over the last 20 years. Normally when they're 60% cutting, we're in a recession. Back in the financial crisis, back coming off the tech bubble. So we have a highest percentage now of Federal Reserve and other central banks easing, yet things are going well. So it's just amazing the amount of liquidity put into markets, and liquidity is so important for risk assets.
Right.
This is another chart that we don't think is getting enough attention. We look at a lot of ways to look at sentiment surveys and so forth, but what we really like is what is actually happening in the market. So here, these blue columns, when they're on the upper end, means more money is moving into stocks. When they're on the bottom side, more money is moving into bonds. So you can see the money flows have dominated to bonds for the last year, dominated. Just now with the stocks moving higher, more people started to put money into stocks. So to us, when you see a real big top in stocks, usually you've had a lot of flows in equities. People are super bulled up. That's just not happening now. It doesn't mean we can't have some corrections, but usually you see a lot of excitement over stocks when you reach the end.
Well, Greg, the calls that I get from clients and from folks I'm not getting calls saying, hey, to your point of that previous slide, hey, let's put more money in the market. I'm getting calls like, hey, I'm worried. I'm reading things, markets at all-time highs, the election, impeachment. Oh my gosh, there's all these bad things happening. Let's take some money out. Let's take some money off the table. That type of thing. What have you got to say about that?
Yeah, well, what that is, that's doomsday talk. That's
right.
Just negative noise is what we view it as. We think the message from this chart is great. It's a little bit messy chart, so let me walk through it here. All those names in that box at the top are notable people, some of them well-regarded in money managers, others, economists, news writers, etc. A lot of recognizable names there. But one thing they have in common is making a lot of really big negative calls on stocks over the last decade. In this chart, what it shows us is if you took money from stocks and put it into bonds every time they said, the sky was falling and stocks were crashing, over the last decade, you would have lost anywhere from 30 to 60% of your money instead of the huge gains in stocks. So this is evidence for one of our things we always talk about: avoid the noise. People can't predict what's going to happen. They're making these crash calls. They're just trying to make a name for themselves. Avoid financial news media of all sorts. Just focus on your longer term plan.
Yeah, and let's be honest. There's always a negative thing going on in the market. There's always a negative news piece, right? And we all know negative news is going to get more clicks, it's going to get more reads, it's going to get more attention than positive ones will. And so it doesn't matter. Like, yes, there's an impeachment going on. It's dominating the media. Yes, there's just a lot happening. And to your point, when you listen to that news and you let your emotions take over, these are the bad decisions that you end up making. So look, stocks are breaking out to new highs. We're trend followers here at Parallel. That's a positive right now, okay? historically, when stocks make new highs, it's a positive. It means you're in an uptrend, okay? Central banks are also easing. So not only is this happening, but you've got two tailwinds. You've got central banks that are helping it, and there's not a lot of investors that have been participating in this. So that's actually even more bullish because the money's been going into different asset classes. So you got market making new highs. So, and finally, ignore those doomsday calls. Stop watching the news so much. It's not news anymore. I hate to say it. It's more entertainment, and it's more about clicks, and it's more about, you know, views and things like that. And if you have any questions, if you do see something or read something, just give us a call or shoot us an email. We're happy to talk you through it and just let you, give you some perspective on what you're doing there. So here's our number. You know where to reach us. You know how to get a hold of us. Thank you so much for listening today, and have a wonderful Thanksgiving.